Welcome, Forever and Profit students, Wall Street Academy students. Welcome to Confluence Trading 2.0. So this is pretty much the newer version to the 1.0 that I did last year, which was a huge success. Everybody loved it. Everybody made profit from it. The education from that last previous video was phenomenal. So I mean, like this right here is just pretty much an overall follow-up and how things have improved. How's my trading style now? Overall, it's still the same old, same foundation. Here goes some notes right here that you can take down. So pretty much overall, my foundation of my trading style is support and resistance, which is pretty much the everything that the market is pretty much based on. Patterns and everything else, they all are based off of support resistance. The market has to break a certain level of support to actually continue a trend, and the market has to reject from a certain level of support to go the opposite direction to start like a new trend and so on and so on. So I mean, like support resistance pretty much overall is like the best way how to actually analyze the market in my opinion, mainly because you're reading the raw market foundation compared to actually using a whole bunch of indicator-based strategies and so on and so on. So when you could actually read the overall base foundation of the market, you can literally catch almost every single move that a market has to make, which is phenomenal. All right. So just like I said on my previous video, here goes some things that I actually use in my trading. Nothing crazy. I don't trade crazy. Trade very, very simple. So overall, I use supply and demand zones, which is pretty much based off of the hour chart majority of times. Actually, only the hour chart. So let me just write this real quick. This right here, 1 hour chart, 1 hour on the chart. So my support resistance lines are always based off of. It's gonna take some time. Hold on. All right. So the main ones I look for is the dailies. These I'm gonna see quite a few. Let's say, how much should I put on here? A lot. A lot. Other ones I'm seeing is H4s. H4s are the ones that I pretty much use the most. Honestly, my H4 support and resistance, which is going to be a vast amount. And the H1s is going to be pretty much every now and then. So pretty much like the H1s are only for more critiquing purposes, as far as like when you're actually about to get into an entry, or if you see a certain level of support resistance that you can actually mark off based off of wicks. And how I mark these off, the daily chart is based off of the line chart. H4 is based off the line chart, and H1 is based off of candles. Right, and that's when I'm actually analyzing them. That's when I'm actually breaking down the market to the most fullest potential. When I actually get my support resistance based off the daily charts, I go based off of the line chart on daily, H4, line chart again, and H1, I go based off of candles. Okay. After that, I use trend lines. Trend lines is a great thing also. Trend lines is also based off of support resistance. Like I said, that is the foundation of everything within trading in my style, which is an overall Confluence trading. Beyond that, I use Fibonacci, which track my retracements, which track my projections as well. That's how pretty much I caught this like a move right here, this big move that happened on AUD for NFP. Like that was all a projection type thing based off of Fibonacci. So just you knowing how to actually use these projection levels is friggin' phenomenal, and definitely you can take advantage of it in all kind of ways. Okay. All right. So keep this in mind. Hopefully everybody writes this thing down. All right. So like when I'm analyzing, the first thing I do, like I always say, you have to make sure your charts look sexy. You know what I'm saying? Take this little thing off right here. Make sure your charts look hot. Okay. So everybody knows that my favorite pair is AUD USD, mainly because this pair is based off of commodities. So meaning that it doesn't really move fast and very, very volatile like other pairs. It moves very, very slow. But when it actually moves, it moves a lot. Right? and you can see setups on it very, very clear compared to other charts. You know, like this chart right here, literally, like I made a shit ton of money off this chart, and I'm very, very blessed and everything just by actually I could say that I have mastered AUD USD. So main thing to take in consideration that you have to actually find a pair and master that pair. Don't switch from it. Just master the fucking pair. You know what I'm saying? Like don't pair hop. Don't try to trade two pairs at one time. Nothing like that. I make money off this pair literally like almost every single day, or whenever I am actually trading this pair, which is freaking awesome, honestly, compared to a person that's actually hopping around and trying to find a pair or trying to find certain setups. It doesn't really make sense to me. Okay. All right. Enough ranting. All right. So pretty much, like when I first start, first thing I do, you have to do, go on a daily chart. You have to get your overall daily support resistance areas within your whole entire chart, right? And only try to do it where price is relevant. See like where price is right here. I'm only gonna be pretty much basing things off of everything left of where price is. So price is right here. So everything left of it is relevant to me right now, and that's gonna be helping me figure out where my daily support resistance are based off of, right? So first things first, what I do is go on my line chart like this and make sure that this right here is red. So overall, so my dailies are my red horizontal lines, my H4 support resistance. As far as I call these indecision levels, indecision levels. So my daily indecision levels are going to be red because they could be either support or resistance. My H4 indecision levels are going to be green, not a bright green, not a super super dark green, but this green right here, right here. The third green up from the bottom, right here. That's gonna be my H4 indecision levels color, line color. Okay. My H1 is gonna be orange, which is pretty much the primary color, which is gonna be right here. That's gonna be my H1s. My H4 is gonna be this green. Dailies are gonna be red, and my randoms are pretty much are gonna be this color blue right here. Randoms are overall the random ass support resistance that you run into as far as trying to look for a certain entry point, stuff like that. Because when it comes down to entries, I get very, very detailed, and I look for almost every single signal that I could find, or every signal, every clue in the market to give me a certain reason why the market should actually pull back to that certain level before I actually take that position. So that's why I only get in certain positions once the market actually hits a certain point that I'm expecting. Okay? So once I start overall, I get on my daily chart. What I'm looking for is areas like this right here. Areas like this. All these wick areas are golden to me right now. Oh, let me take off ADX. All these are golden to me right now. All these areas. All right. So pretty much I have based this daily support resistance just based off of the market hitting this area multiple times. 1, 2, 3, 4. The market is indecision, has is very indecisive when it actually comes down to this price right here. So whenever the market actually comes to this price in the current market, just know to actually just get ready for setup, get ready for a market bounce, get ready to take a position, probably mainly because the market actually create candle reverse patterns off of this area right here. Okay, so on the dailies, there's not a certain amount that you can actually just have on your chart, but overall, use your common sense. Don't try to clutter it too much, and only try to actually find areas of major indecision to actually mark on here and call relevant. Okay, so after that, I keep on just pretty much like grab a line and keep on scrolling down, and I'm looking for all these indecision areas within a market. All right, and I'm just marking them off. So I'll probably mark off this one right here. I mark off this one right here because, as you can see, on this side it acted at a certain level of resistance. On this side, it acted at a certain level of support. So since it pretty much is kind of intertwined a little bit, I'll try to put it like towards in the middle, just so it's pretty much the median of that entire area right there, just so that it actually counts as a certain indecision level. Beyond there, grab another line and keep on going down. Give me 1 second. Let's find all these indecision levels right here. This area right here is pretty much very, very relevant, mainly because look right here, acted at a certain level of support, acted at a certain level of resistance. So overall, it's freaking golden. And if you look to the left of it, acted as resistance, acted as resistance, acted as resistance, acted as support right here. It's very, very golden right here for indecision level based off the daily time frame. After that, I just keep on scrolling down. Indecisive, 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 and you can count this as indecisive also, because probably on the candlestick chart, it's probably a wick within that area, so you can count that. See? Wick areas. And keep on scrolling down. Okay? Irrelevant, because look, resistance, 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 support, 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 resistance, support right here, and support all over here also. Let's look how it looks on the candlestick chart. Okay, so whenever the market came up to that price, it was very indecisive. So pretty much whenever it comes down to this price in current time, just make sure your ears stick up and get prepared for something to happen. And keep in mind, all my entries are only based off of support and resistance, always. It's never ever based off of anything else. If the market is not on a support or resistance area, I'm not taking an entry. My entries are only based off support resistance, mainly because you have to have a strong foundation for an entry, mainly because you don't want to get into an entry and it goes against you as far as any kind of drawdown. So when I actually enter an order for a buy, for example, that means that I'm entering on a certain level of support. So pretty much that certain level of support is like my ground, like my floor for that buy order. So the market has to have a lot of friggin' momentum to even break through that support area and go against me. So I mean, like at the end of the day, like if your areas are not based off of support and resistance, you're playing yourself. You know what I'm saying? And this is how you actually become more consistent also, because it gives you more reason as to why you actually enter an order at a certain time for or at a certain area inside a market or at a certain price inside a market. Because if you don't have more reason, as far as 2 to 3 reasons why you actually enter the market, then more than likely you enter it for the wrong reasons, right? So you always have multiple reasons why you enter the market, as far as what are your fib levels? Do you enter off support resistance? How is market structure? Everything else. So like you always have to have multiple reasons why you enter the market, just so it gives you more confidence. The more confidence you have in your orders, the better your orders can be. Point blank. Okay. Let me see if I can find one more area under here. Okay. That was area because based off right here, support acted as a little this little squiggly area right here, the sideways movement, that acted as some kind of indecision also. So you could definitely count that as an indecision area. Right here, it acted as resistance. Right here, it acted as resistance. Right here, it acted as support, and then so on. So that right there is done for the daily chart, guys. Beyond there, H4. H4 pretty much, you're gonna see a lot more details. So the lower the time frames, the more details that you're gonna see, the more movement that you're gonna see overall. But honestly, like when it comes to like certain patterns, I love the H4 mainly because the patterns are so thick, and it takes a lot for the market to actually create that pattern on H4 compared to the other time frames. But the main chart I do look at majority of the times is H1. But when it comes to me looking for a certain kind of pattern, I base it off H4, but I'm on lower time frames actually seeing how that pattern forms, and I'll show you a little bit more on that later on within the video. Okay, so keep in mind, so when it comes to H4s, I'm going to be finding 2 to 3, actually 1, 2, max 3 H4 support resistance between each daily zone. So this right is one zone. Let me try to mark it for you guys. So right here is one zone. This right here is 2 zone. And so on and so on. Zone 1, zone 2, zone 3, zone 4, zone 5, zone 6, zone 7, zone 8. Okay? So in between, on these zones or in these zones, I'll be finding 1, 2, max 3 H4 support resistance off these areas right here. All right, so zone 1, let me try to find an indecision level. If you look right here, indecisive, right here acted as resistance, right here acted as support, right here acted as support. And let me see if I can find one more before I leave to the next zone. Okay, I'll probably put it like right here, a little bit down more. Because if you look like right here, remember, every single thing counts. This little slit right there, that counts also. Look what happened right here. Just me basing this off a line chart, I could tell that right there acted as some kind of indecision type of area, and over here acted as resistance also. So that pretty much sums up this whole zone right here as far as me finding my support resistance areas off of the H4s. And the little sideways movements counts as indecision levels. Once you go back on the candlestick charts, you can see how it forms in a certain kind of way and everything, just it being a certain direction on the line chart. Okay, so this area is like a little bit smaller, so I might just find only like one indecision level within this area. So I might just put it right here. Indecision, indecision, indecision. All right, keep on going. Let's go. All right, it's 1. If I could find 2, I would find 2, but it's going to be very, very packed. I hate trying to pack in support resistance areas within my zones. Okay, another zone, resistance, resistance, support. Let's see if I can find one more. All right, so see how like right here acted as some kind of level of support. On this side acted as some kind of level of resistance. Since it pretty much is not on the same price, I would try to put it in the middle, so it catches the median of these entire areas right here. So when I go back on the candlestick chart, that's what I see. Wicks, wicks. Perfect. Okay, keep on going to my zones. Right here, support, resistance, resistance. Perfect. Next zone. Okay, the last zone, if I see potential. Indecisive, indecisive, resistance, support, all over there. I could probably fit one more within this area. I could find the area right there. Acted as support right here, acted as resistance right here. So that's pretty much perfect. So, all right, so beyond that, I go back to my candlestick chart. Okay, so let me just clear off these zones. Okay, so as you guys know, market structure is a major thing in my opinion, because the market runs in a certain direction overall. So look what market structure did. Like, I hope you guys watched that market structure video. that I had put out, which is in phase 2, I'm pretty sure. So if you look at the market, the market was making higher lows, lower highs, lower highs, lower highs, lower highs, lower highs, right? So once the market actually came up, like it had a certain level of support that it didn't break right here, it pretty much created a double bottom pattern, right? But once the market actually broke this level of support up here, that broke market structure because the market made a new high, right? So now we're looking for a higher high right now because the market's on an uptrend. So once the market actually broke that structure, you won't really be looking for a downtrend anymore for long term compared to the counter trends that it's going to be showing. Like this right here is a counter trend, mainly because the new trend is uptrend, right? So the market created lower highs or higher lows actually. Downtrend is going to be lower highs, lower lows. Uptrend is going to be higher highs and higher lows. So the market created higher highs, higher lows within this area right here. So once I seen that, I would know that overall the market switched trends. So I won't be looking for certain trends like I would have been looking if the market was still in the current downtrend that it was. Because the market actually broke market structure once it actually broke this certain level of support, certain level of resistance right here. Once it broke past, that structure is done. Okay, it's literally finished. So once that happens, I would say, okay, the downtrend is done. Perfect, like let's move on now. Okay? Beyond there, H1. H1, pretty much I'm looking for areas that has a lot of wicks. Areas, that has a lot of wicks is like areas like these right here. Wick areas. And all I'm doing is catching the medians of these areas. I'm not getting at the lowest wick, not the highest wick within this area, but pretty much an area that it touches as much wicks as possible across the whole board. So see how like right here, just based off these wicks right here actually, it touches almost every single wick within this whole entire area. And that being said, me knowing that it touches like right there, I could base these areas for support areas also. And if I go all the way to the left side, you'll see that it's pretty much still being respected in some kind of way when the market actually comes all the way to the opposite side, which was pretty much in February in 2016 within this whole entire area. It acted as some kind of level of resistance, kind of level of support. It was an overall indecision level just based off of those wick medians right there, right? Once the market actually broke that area right there, that's how I actually caught that position mainly because I know that the market was in a broke market structure, so I would not be looking for a sell anymore. You know, it was so simple, it's ridiculous. Where's this area? Beyond there, I'm drawing my trend lines. I'm marking off my 2 zones, which is point A is right here. Point B is right here. After that, into the future. Into the future, you'll see that the market actually is all right here is a sell zone. Everything under this trend line right here is considered as a sell zone. Everything on top of this area right here is considered as a buy zone. Okay, so what did the market do? The market broke market structure for one. After that, it broke the trend line. It bounced on it, right? Came back down, H4 support. But at the end of the day, it broke market structure. That's the main thing. But look right here. People will probably say that, okay, look, oh my God, it made a new low, this and that. But if you go based off the H4 chart, which is what I exactly did, the market literally didn't break support. It tested it. Okay? Remember what I said inside a previous video on the previous Confluence video? Actually, the market could test an area or it could break an area. It's 2 different things. Okay? So these areas right here, whenever the market actually creates like a half area like this, as far as like a half candle, it's testing it. It's not breaking it. To be considered as a broken area of support or a broken level of resistance, the market has to actually break this level of support, actually pass it like this, and create a brand new bearish candle over it and close over it also, which is not what it did. Okay, it didn't do that, so it wasn't considered as broken. The market tested it. Okay, just like right here, tested it. It wasn't even broke over resistance. It tested it. Okay. Compared to, let's say, let me find one real quick for you guys. So pretty. Come on, man. I'm pretty sure that all my students caught this right here. Like all my mentorship students caught this right here. Honestly, like it was freaking gorgeous. Honestly, and like all these areas right here, tested. Nothing was ever broken. Halfway, tested. Okay, so tested again, right here. So this right here can be considered as a certain level of broken, which could pretty much almost could fake out a lot of people. But then once you went on the H4 chart, damn, I think I lost it. Let me find it again. Halfway. It was never ever broken. It was tested. It looked like it's broken on a lower time frame, mainly because on lower time frames you'll see a lot more movement, you'll see a lot more noise compared to the higher time frames. So pretty much that's why I love to trade off the higher time frames now, because I see less noise and I see more clarity within the markets, which is freaking awesome as shit. All over here, it was never broken. Tested. As you guys can see, everything was halfway over it. Nothing was completely broken over it. Again, tested. Okay, so this right can be considered as broken in some kind of way also. A bearish candle closed over it, and it pretty much came back up to retest newfound resistance and then dropped again. More than likely, you could have tracked this just based off of Fibonacci also. $38.2 retracement, came up, came up, came down, came up, retrace. First level of retrace is going to be a 38.2 mark. But yeah, again, tested, dropped. All these areas that are halfway on these level of support and level of resistance, these are all tested areas. Nothing was ever broken. And people that like think they are broken, that are trading off the lower time frame, that like the 15-minute chart, 30-minute chart, they're all getting faked out, mainly because they're seeing too much noise inside the market, which pretty much can fake you out dramatically. Okay, and so, some good things also that people have to take in consideration is that you have to look at your patterns, know your candle reverse patterns, every single one of them. Some examples I stress to know them is because they're very, very valuable. And this is how I get in some bomb ass entries every single fucking time, honestly. So me seeing that this right here is an engulfing pattern, or the formation of engulfing pattern on a higher time frame, like the hour chart. A lot of times I would go on a lower time frame, like 30-minute chart or 15-minute chart, to actually enter this kind of order right here, or execute this order actually. Okay. So seeing that it's a pattern on a higher time frame, which is the hour chart. I go on a lower time frame now, it's still a pattern, which is pretty much the engulfing pattern right here. Beyond that, I go on a 15-minute chart just to see if that pattern still exists, and which it does right here. Pretty much it's still considered as a pattern, right? And me seeing these little details inside the market is preparing me for my entry, right? So me seeing that pretty much overall, it didn't actually fully break the daily resistance on this time frame right here. My entry on this area would have been like somewhere like right here. Mainly because of this, right, on this wick right here. So once this pattern formed, I'll be waiting until the third candle after to actually enter the market, because once once a candle reverse pattern forms, like an engulfing pattern, the candle that happens after it, it retraces to some extent to kind of try to fake people out, quote unquote, and then that's when you enter the market. That's when I always enter the market. Always, always, always. Let me show you guys a better example. Okay, perfect. So this right here is an engulf pattern, 1, 2, right? What happened after? Right here was the third candle. This right here is considered as your entry candle. The market came back down and retested what? H1, which was that median that I drew. Came back down, retested minor support, and then that is when you would have took your entry, just based off the market actually retracing to some extent and shooting back up. Simple as that, honestly. Like right here again, candle reverse pattern, 1, 2. Beyond that, my entry candle is going to be what? This third candle right here. Why? Just based off of minor resistance, minor support actually. That is my level of support, which is right here. Hold on, sorry, messed up. Whatever. This right here is my certain level of minor. Damn, it's not even going. This was my minor level of support, which was based off of this wick right here, this previous wick. Candle reverse pattern form. My entry candle is going to be what? After the candle reverse pattern, which is right here, this candle right here. So once it actually retraces to some extent, which was right here, my entry is right here. Damn, this shit's acting so dumb. Oh my gosh. My entry candle is pretty much, my entry candle is right here on this wick right here. After that, take it up. So that's why I'm looking for all these candle reverse patterns on a certain time frame. But you have to actually know what the hell you're looking for. That's the main thing, right? That's the main thing. Once again, candle reverse pattern, 1, 2. Entry, actually the previous wick, which is going to be right here, the bottom of this wick right here. This wick right here. Beyond that, my entry candle is going to be this third candle, which was the retrace. If I went on lower time frames, I could have probably seen it a lot better. Up a little bit. Candle reverse pattern, candle after, entry candle. Shoot it up. Okay? Oh yeah, and the projection. How was it again? How did I draw this? You have to draw fibs a certain kind of way every single time. Okay, here it is. Okay. It was from here. Man, why is this? Fibs from there to there, right? 0%. Beyond there, the market retraced to 61.8. So pretty much the projections for a 61.8 retracement is negative 27%, which is pretty much where I have my take profit on this order. Beyond there, if it breaks negative 27%, I'm looking at a 161.8 projection a lot of times. So pretty much it could do a lot of two things also. It could bounce off 38.2 and go to negative 27%, or it could bounce off of 61.8 and go to 161.8 or negative 27%, depending on how everything plays out. Because everything's an overall a case-by-case basis. Nothing is pretty much set in stone. So you have to take in consideration that you have to adapt to the market every single time that is actually doing a certain formation. Okay, nothing's ever going to be the same, but overall, learn how to adapt to the market in every single situation that is actually doing. Okay, and this right here is all pure technical analysis, guys. Nothing crazy, and yeah, but simple as that. Hope you guys enjoyed the video. A little breakdown on Confluence trading, how I take everything in consideration and go from there. So hope you guys enjoyed it. See you guys on the profit side. Peace out.